Before diving into the world of certificates of deposit, or CDs, it's important to understand what they are and why they might be a good fit for your financial goals. CDs are time-bound savings accounts offered by banks and credit unions, typically providing higher interest rates than regular savings accounts. However, they come with certain restrictions, such as locking your money away for a set period. In this video, we'll walk you through the essential questions you should ask before purchasing a CD, ensuring you make an informed decision that aligns with your needs. Start with the basics. What exactly is a certificate of deposit? A CD is a financial product that allows you to deposit a fixed amount of money for a predetermined period, earning interest over time. Unlike regular savings accounts, you can't withdraw your funds before the term ends without facing penalties. Understanding this core concept is crucial before moving forward, as it sets the foundation for all the questions you'll need to ask. You might wonder why someone would choose a CD over other savings options. CDs are popular because they offer higher interest rates and guaranteed returns, making them attractive for those who want a safe, predictable investment. However, the trade-off is limited access to your funds. Before buying, consider your financial goals and whether you can afford to set aside money for the CD's entire term. One of the first questions to ask is about the interest rate. The rate determines how much your money will grow over the CD's term. Ask whether the rate is fixed or variable and compare it to other banks' offerings. A higher rate means more earnings, but make sure to understand how it's calculated and if it changes over time. Another key question is about the CD's term length. CDs can range from a few months to several years. The term you choose should align with your financial plans and when you'll need access to your money. Longer terms often offer higher rates, but they also mean your funds are locked away for more time. Make sure you're comfortable with the commitment. CDs often require a minimum deposit to open an account. This amount can vary widely between banks and types of CDs. Ask about the minimum deposit requirement and ensure it fits within your budget. Knowing this upfront helps you avoid surprises and plan your investment accordingly. One of the most important questions is about early withdrawal penalties. If you need to access your money before the CD matures, you'll likely face a penalty that can eat into your interest or even your principal. Ask for details on these penalties so you understand the risks of withdrawing early and can plan accordingly. Safety is a top concern for any investment. Ask whether the CD is insured by the FDIC or NCUA, which protects your money up to certain limits if the bank or credit union fails. This insurance gives you peace of mind, knowing your funds are secure even in the worst-case scenario. It's important to know what happens when your CD reaches maturity. Some banks automatically renew your CD for another term, while others transfer the funds to your savings account. Ask about the maturity process and your options so you can decide whether to reinvest, withdraw, or explore other opportunities. Besides early withdrawal penalties, some CDs come with other fees such as maintenance or account closure charges. Ask for a full list of potential fees so you're not caught off guard. Understanding all costs involved helps you accurately calculate your net returns. Interest payment methods can vary. Some CDs pay interest monthly, quarterly, or at maturity. Ask how and when you'll receive your interest, as this can affect your cash flow and reinvestment plans. Knowing the payment schedule helps you plan your finances more effectively. Most CDs don't allow you to add more money after the initial deposit. However, some banks offer add-on CDs with this feature. Ask if you can make additional deposits during the term, especially if you anticipate having extra funds to invest in the future. There are several types of CDs, including traditional, jumbo, bump-up, and no-penalty CDs. Each has its own features and benefits. Ask your bank about the different options and which might best suit your financial goals and risk tolerance. A grace period is the window of time after maturity when you can withdraw or reinvest your funds without penalty. Ask how long the grace period lasts and what actions you can take during this time. This flexibility can be crucial for making the best decision with your matured funds. Interest earned on CDs is typically subject to federal and sometimes state taxes. Ask how taxes are handled and whether you'll receive tax documents at the end of the year. Understanding the tax implications helps you plan for any potential liabilities. Banks sometimes offer promotional rates or bonuses for opening a new CD. Ask if there are any current offers that could boost your returns. Taking advantage of promotions can make a significant difference in your overall earnings. CD laddering is a strategy where you open multiple CDs with different maturity dates. This approach provides more frequent access to your funds and can help you take advantage of rising interest rates. Ask your bank if they offer tools or advice for setting up a CD ladder. Opening a CD usually requires certain documents such as identification and proof of address. Ask your bank what paperwork you'll need to bring so you can prepare in advance and streamline the process. Managing your CD online can make things much easier. Ask if the bank offers online account management, including viewing balances, tracking interest, and handling maturity instructions. This convenience can save you time and help you stay on top of your investment. It's wise to research the bank's reputation before investing. Look for customer reviews, ratings, and any history of issues. A trustworthy institution ensures your investment is in safe hands and that you'll receive reliable service throughout the CD's term. Many banks now offer mobile apps for managing your accounts. Ask what features are available for CD management, such as notifications, balance checks, and maturity alerts. A robust app can make monitoring your investment much more convenient. Some banks allow you to name beneficiaries for your CD, ensuring your funds go to the right people if something happens to you. Ask about the process for designating beneficiaries and any documentation required. This step can provide peace of mind for you and your loved ones. Interest on CDs can be compounded daily, monthly, or annually. The more frequently interest is compounded, the more you'll earn over time. Ask your bank about the compounding frequency and how it affects your total returns. Some CDs automatically renew at maturity unless you provide other instructions. Ask about the bank's renewal policy and how you can opt out if you prefer to withdraw your funds or choose a different investment. Knowing your options helps you avoid unwanted renewals. While CDs are generally safe, it's important to understand any risks involved. These might include inflation risk, interest rate risk, or the risk of needing your money early. Ask your bank to explain all potential risks so you can make an informed decision. In some cases, you might want to transfer your CD to another person or institution. Ask if transfers are allowed and what the process involves. This flexibility can be useful if your financial situation changes during the CD's term. Some banks offer special CD products for seniors featuring higher rates or more flexible terms. If you're a senior or helping one, ask about these options. They can provide added value and better suit specific financial needs. Understanding the step-by-step process for opening a CD can save you time and frustration. Ask your bank about the application process, required documents, and how long it takes to get started. Being prepared ensures a smooth experience. Life can be unpredictable and you might need to close your CD before it matures. Ask about the process for early closure, including any penalties or paperwork involved. Knowing your options can help you plan for emergencies. If you want to open a CD with a partner or family member, ask if joint accounts are available. Joint CDs can make it easier to manage funds and ensure both parties have access. Be sure to understand the rules and responsibilities involved. Some CDs have a maximum deposit limit. Ask about any caps on how much you can invest, especially if you're planning to deposit a large sum. This information helps you plan your investment strategy and avoid surprises. Some banks offer CDs in foreign currencies, which can be appealing if you have international financial interests. Ask about the availability, risks, and benefits of foreign currency CDs and whether they fit your investment goals. Good customer support can make a big difference in your banking experience. Ask about the availability of support, including phone, email, and in-person options. Responsive service ensures you get help when you need it. While many banks operate online, you may prefer a local branch for in-person service. Ask about the bank's physical locations and whether you'll need to visit in person for any part of the CD process. This can affect your convenience and access. Some banks offer CDs that support environmental or social causes. If these values are important to you, ask about green or social impact CDs. Investing in these products can align your finances with your principles. Interest rates can change quickly. Ask if the bank offers a rate lock, which guarantees your rate from the time you apply until the CD is funded. This can protect you from rate drops during the application process. If you're investing on behalf of a business or group, ask about special CD products for organizations. These may offer different terms, rates, or features tailored to business needs. Understanding your options can help maximize returns for your group. While rare, bank failures can happen. Ask what protections are in place, such as FDIC or NCUA insurance, and how you'd access your funds if the bank closes. Knowing your money is protected can provide peace of mind. Some CDs, known as no-penalty CDs, allow you to withdraw your funds early without a penalty. Ask if this option is available and what the terms are. This flexibility can be valuable if you anticipate needing your money sooner. Before committing to a CD, consider alternative savings and investment options such as high-yield savings accounts or bonds. Ask your bank to explain the pros and cons of each so you can choose the best fit for your financial goals. Staying informed about your investment is important. Ask how often you can check your CD balance and whether updates are available online, by phone, or in person. Regular access helps you track your progress and plan ahead. If you're planning a large deposit, ask if the bank offers special terms or higher rates for jumbo CDs. These products can offer better returns but may have different requirements or risks. Understanding these options can help you maximize your investment. Ask how long the application and funding process takes from submitting your paperwork to your CD becoming active. Knowing the timeline helps you plan your finances and avoid delays, especially if you're timing your investment for a specific goal. Many banks offer alerts for important CD events such as maturity dates or interest payments. Ask about available alert options and how to set them up. Alerts can help you stay organized and avoid missing key deadlines. Wrap up: buying a certificate of deposit is a significant financial decision that requires careful consideration. By asking the right questions about interest rates, terms, penalties, insurance, and more, you can ensure your investment aligns with your goals and risk tolerance. Take your time, compare options, and don't hesitate to seek advice from financial professionals. With the right information, you'll be well equipped to make the most of your CD investment.